want a checklist to help you find $20,000 to take home from your HVAC, electrical, or plumbing company, this is the one that I use with my CFO clients. I call it the where the hell's my money readout because that's what most contractors are asking. Where the hell's my money? And just by asking these 5 questions, you can certainly find it. Right? Number one is, am I collecting my money fast enough? If you're not collecting jobs uh, under 30 days on average, then you are losing money to opportunity costs, right? We call that cost of capital, or because you have job supplies out on supply house bills or on lines of credit or on credit cards. And so my rule of thumb is for every 30 days after that first 30-day period, you're losing 1% of the total job value, not 1% of the profit, 1% of the total job value every single month. If you're not collecting your jobs fast enough and you typically have $100,000 in AR, that can and you carry them about 60 days, that can very easily be $10,000, $15,000 a year on $1 million company. Am I pricing my jobs well? If you're pricing your especially HVAC, but electrical and plumbing jobs as well, under 40% on average for those margins, then you're likely losing money because by the time we factor in taxes, fixed expenses for overhead, right? Things like your truck, your admin, your sales team, all those kinds of things, if you're not charging 40% of profit in there, by the time everything gets down to the bottom line, there's nothing left to bring. Think about it on $1 million company. If you just increase prices by 2%, your margin by 2%, that's $20,000 that flows to the bottom line. A lot of companies have room to do that. Do I have enough cash to run my business? This goes back to cost of capital. If you're borrowing money to do jobs, you're losing money every year. A lot of HVAC contractors I know are paying $20,000, $30,000 in interest. You got to build up that cash balance and use bank debt instead of credit cards to avoid paying too much in interest. Am I putting enough aside for the tax man? You know, Uncle Sam charges you interest too, right? So when you put yourself on a payment plan with the IRS, boom, that's more interest. Plus, that ties up capital that you'd rather have in your business. If you're not putting money away to meet your tax obligations and you're not reducing that tax obligation through legal tax strategies, really easy to find $20,000 in that category. Am I taking home enough money? Look, if you're not taking home enough money, what people tend to do is they try to squeeze personal expenses into their business, and that really drags on the profitability of the business. Dragging on the profitability of the business keeps you from doing things like getting bank loans. It really keeps you from all these other things because you're trying to blend your personal and your company finances together. So we want to make sure you're taking home enough money from your business to eat, but not so much that you're dragging money out of the business. So salary, if your salary distribution is less than 10% of sales, that means one of these other 4 categories is broken.